Hi, welcome to our financial channel where we'll study the current Fed actions and their potential impact on your investments. The Fed has navigated economic conditions, hinting at a change in monetary policy due to complexities surrounding the economy. Between 2019 and 2023, the Fed increased interest rates to combat inflation from supply chain disruptions, government spending, and global events. By 2024, rates peaked at 4.25% to 4.5%, reducing inflation to approximately 2.5% by mid-2025. At the Fed's July 29th to 30th meeting, the majority opted to hold rates steady despite growing concerns about job stability and potential inflationary pressures from increased tariffs. The minutes on August 20th showcase differing opinions among committee members. Fed officials face concerns about a weakened labor market and uneven job growth, as well as elevated inflation pressures from potential higher tariffs. They stress flexibility, ready to adjust policy based on factors such as AI-driven productivity shifts or geopolitical tensions. The shift in focus from 2022 signifies a review of the Fed's monetary policy framework that could change their goal for inflation, communication, or tool usage like QE. Investors should anticipate changes in their targets, communication style, or strategies. Stocks could benefit from lower interest rates, improved market valuations, and reduced borrowing costs. However, persistent inflation fears may raise market volatility. Investors might consider ladder bonds or TIPS for inflation protection. Bonds could benefit from lower rates and increased demand, but elevated inflation could hinder bond performance. Investors might consider laddering bonds or using TIPS for protection. The dollar could strengthen, making U.S. goods more competitive but raising inflation risks. Commodities like gold could perform well with lower rates, but oil might face headwinds due to slower growth. Overall, economic projections hint at a softening trajectory with GDP growth at 1.4% in 2025, unemployment at 4.5%, and inflation approaching 2.4% in 2022. The Fed funds rate is expected to end in 2025 at 3.9%, with gradual cuts possible as inflation concerns rise. Stay informed as uncertainty surrounds rate changes and trade policies. Subscribe for our next update and see you later.